Hey guys, thanks for clicking on the video. Today we are going to be looking at GameStop. We're going to be going through some technical analysis on the stock to sort of see where the momentum of the stock is going, where it's heading in the short term. We all know where it's going in the long term. We've all done the DD, we've all seen it, we know what's going to happen, but I just want to kind of have a look and see if we can see any price fluctuations that are going to be coming in the next couple of days, because normally when there's things like that, there's big shorting movements that try and counteract the stock price. But before we get into that, let's have a look at the reverse repo number. For today, it is 1.375 trillion, so down a bit from where it's been. But if we just go on that last month, you can see that 1.3 trillion was where we were about in late September, before the increase on the amounts from 80 million to 160 million. But you can see it's still very, very high. And if we go 3 months, I mean, look at that graph. That's a great graph. And then a year, that's a crazy graph. That's exponential growth right there. We're heading to something crazy. We did get that 1.6 and haven't quite got that highs. But anyway, it's still going on the up. So please give a couple of likes on the video for that. Anyway, let's have a look at the stock price of GME. So you can see it is $173 a share, which is up 1% on the day, which is great news to see. One thing that we want to look at is these lines of support and resistance that we've identified. So we've identified that these are levels of support. These are like the floors, if you will, which we hadn't crossed below. I previously marked this one. In fact, I am going to mark it as red just so we can see it and put this here. Now, I did mark this one as a potential one, but it was proven incorrect. But if you go back to even in July, oops, sorry about that. It's not letting me do it. Let's go a little bit lower. Nope. Oh, because I haven't clicked it. Let's click it again. So if you do this one as well, this was also a line that was identified. But what we saw is that it broke below it for a couple of days. Then it had a bit of positive momentum on the upside. So that's what we'd like to see. It has happened a couple of times. This one was a floor which it broke below and then came back up, and then again in July. So that is not a problem. We're really looking at this 150 mark as the new floor. In fact, when this shoots back up, we might actually mark this one now as a potential one. Let's put another line here and see what happens with this over the next coming days. But it was around about 165 is where we hit. So let's mark that one and follow it along and see what happens. So what am I looking at? Well, I want to look at some technical analysis because I do find it interesting to see what the stock's doing. So we're going to look at MACD on the daily level at the minute. So as you can see, we are currently in negative. The MACD and signal line crossed again on the, when was that? About the 17th, 15th of September, which was about here when it started to go down and broke below that 175 mark. And again, but on the positive side, you can see that the momentum is going on the positive side again. So we could be expecting a breakthrough again, even getting prices of 180, 185 in the next couple of days, because this looks like it is decreasing. Momentum is on a positive side. And if we look back to other times this has happened, normally it goes, well, you can see here, up and then down, up and then down, up and then down. This one kind of had a little bubble. That one kind of had a bubble. So it could, the growth could, the negative price decrease could slow, then a bit more, and then go back up into the green. But we haven't seen periods for longer than, well, how long was this? A month and a half, and it's been negative for about a month. So probably expecting the price and the momentum to increase in the next couple of days. So that's MACD. I think it's always a good tool to look at. The next thing is RSI. And why do we like looking at RSI? Well, because we can see what's happened in the past. So RSI is whether the stock is oversold or overbought. And you can see here it is around about, what, that 38.40. So if we look to a similar time, it was about that, was here in August. And then what do we have before there? The stock massively shot up, but it even hit levels of 30 and 70, which is the lowest point. So when it got to 30, this was the lowest point it's been in quite some time. I even marked that as a floor, and then it's increased since then. The 40, that was another time, and then it shot up. So we haven't had quite the lows recently. We've had a slow one, but if we look back even then, where are we here? Similar period here in May, we got into the underbought regions and then it shot up. So this is really definitely showed some lines of support. We haven't broke below these areas this entire time. So maybe we could go a little bit lower without any trouble, and then we would expect a good move on the upside. So that's RSI. You can see that it's even got the highs here as well. Once it hit the highs, it started to go down. Highs here, it started to go down. We've only broke above the 70 percentile. I think it's 70 percentile the past few times. Obviously in January when it was shooting to the moon, but then they stopped us. Then again in the second moon shooting, and they, turned it off again. But you can see here we've had a couple of times at the 350, but this has been pretty consistent. When it's got down here, the stock normally has shot back up. So if you are waiting for a time to buy, which I would not recommend, if you are trying to time the market, time GameStop, which is almost impossible, this has definitely been a good indicator for it, but I'm not going to recommend that. I would say if you like it and you like it at the price and you think it's going where we all think it's going, then 172 is a pretty good price if you think it's going to the moon, let's just say. Okay, and then the next thing I want to look at, just some little moving averages, because why not? Who doesn't like a moving average? When I'm normally looking at stocks, I like to look at the 50-day, 100-day, and 200-day. So we'll get the 50-day. We'll close that down, and we will duplicate it and duplicate it again. We'll do the 100-day. And of course the 200-day, and I'll just have to change the colors of these just to make it a bit more visible. So the 200-day is the longest moving average, so we'll put that one in red and we'll make it a thick line just to make it obvious. The 100-day is the next one, and we'll put that in yellow because it's the next fastest moving line, and we'll make it a bit thicker as well. How do I do that? Style, line, thickness. I probably made these a bit too thick, but who cares? It's fine as long as you guys can see it. And the last one will obviously go green because it's the fastest moving day. And what we'll do is we'll click on that and then change that to the thickest line. So these lines are way too thick, but if we just zoom in and see what we're seeing. So what are we seeing? Well, the 200-day is definitely, we're well above that. Has been, long before it showed us any support of this line, but we are coming across the 200-day. The 50-day and the 100-day, we saw a golden cross here. Sorry, that is incorrect actually. We saw a death cross here where the averages crossed below each other, but then there was a shooting in price. So that's obviously very inverse movements to what you would expect in normal technical analysis, which just kind of shows how hard it is to use technical analysis on the stock and why I don't recommend it. But I like to see where it's going. And then you can see here we had obviously the price crossing both those averages, which was a good signal to buy, and then it dropped below it. So I don't like these moving averages for this stock. I think RSI and even MACD is better to see that, but I just wanted to show that how you can see that sometimes they're not the best for the for what we're looking at. But interesting nonetheless, because it just shows that this stock is heavily manipulated, heavily supported by us, heavily got a lot of resistance by them, but I think it's still going in the right direction. And I just want to quickly bring up the S&P because I like looking at it and see what it's been doing for the day, and I believe it is up on the day. Yeah, people were saying there's a crash coming, here's the end is nigh, people were calling it, but now we have some pretty good movement to the upside, and it looks like look at that candle. Is that a real candle? 190. Good day forever that was, but you can see it's actually going up and almost getting back to where it was at its all-time highs a couple of days ago. Right guys, thanks for watching. Hope you enjoyed the video. Please give a like if you enjoyed it, and I'll catch you guys next time.